I do have to continue on the lines where we left, right? So Chef, then Ram, then panel 1, and now it's the challenge for the panel 2 to win, right? Okay, so just to give you a perspective, right? We've been talking about the innovation. We've been talking about how the innovation is getting powered by fintechs. What we want to do with this particular panel is take it a little further, take the conversation a little further, and start looking at what are the pockets of growth in the Indian economy right now, and see how technology can really impact that. And right now, clearly, I'm sure everyone will agree, it's on the lending front, huge opportunity. Payments, a lot of stories being told, but there is still a lot to be unfolded. And third, of course, wealth management. The whole point about a lot of people getting access to wealth management tools which were previously unavailable. So a lot of opportunity is going to come up, and it's into play. So how is technology going to actually impact that? And of course, AI being one of the most important technologies, we can't keep that away. So with that, let me call upon my panelists for the day. First up, let me call upon Mangesh Mahale. He is the Chief Technology Officer at Ujjivan Small Finance, a veteran in the banking industry. He's been with the State Bank of India, Union Bank of India for long stints, and he knows technology inside out. Next up, Namita, please welcome. Namita is the Portfolio Optimization Director at HSBC. She serves all HSBC locations across the globe, GCC of course. She has more than 2 decades of experience across multiple FSI domains, including credit assessment, credit rating. So, some of the questions that were asked in the first panel can also come here. Insurance, retail, and wealth management. So, pretty much covers everything that we're going to talk today. Thank you so much. Next up, Sumit Agarwal. He is the head of MSE and supply chain at Jana Small Finance Bank. He's developed a last mile supply chain model at Jana and has led end-to-end digital transformation at Emirates NBD. So pretty much, again, knows the technology impact on business inside out. Finally, Srirang Shrikanta is the CEO of Yeti Consulting. Yeti Consulting is a testing powerhouse. Testing and AI, I would say, is a match made in heaven, if I may say that, Srirang. And the reason I simply say it is, it's a time-consuming. Testing is a time-consuming thing, and AI just is, what the doctor ordered, right? So, Yeti's testing automation, it can dramatically improve efficiency and a lot of other things, but I will not go into it. But the reason I also want to say that, Srirang, he's seen the entire evolution of technology. He's been a prolific speaker and pretty much, knows everything under the sun when it comes to technology and the financial services space. So thank you so much. My name is Nikhil Gokhale. I am the head of research at IBS Intelligence and the one who's going to ask some easy and some difficult questions to this panelist. And at the end, I will, of course, open it for tougher questions from the audience to the panelists. So thank you. Look, I have some questions that I have prepared for the panelists. Can you hear me? And I'm going to, all these questions, I'm going to, quickly change them on the fly so that I can put you under the scanner. I'm sure you'll be able to give, much smarter answers in that sense. I'm going to start with you, Sumit. Right? As I said, we're going to go in a slight bit of detail when it comes to the specific growth pockets. Let's talk about the lending, which is the growth pocket. When how can the digital platforms how will those change the way lending is done? What kind of problems you currently face, and going forward, how can they be addressed and how will they be addressed?
Thanks, Nikhil. Good afternoon, everyone. I hope you can listen or hear me properly. Thanks. So I think let's start with the context setting a little bit. In India, more than 30% of the GDP is contributed by MSMEs. 40% of the employment is contributed by MSME. And recent CII, Confederation of Indian Industry report, has said that by 2029, 2030, startups, which is the most exciting form of actually MSME, will contribute 50 million new jobs and will add about $1 trillion to the economy. And then, if we have a $5 trillion economy goal and becoming Viksit Bharat by 2047, this segment has to grow, right? And for any business to grow, you obviously need funding. And you can't just work on lending. And in our startup ecosystem, we discuss a lot these days that if someone somehow reaches Series A, now it has been empirically, statistically proven that the chances of survival and success is very high. So the idea is that MSME can only survive if they grow. And they can grow if they get the fuel for funding. Now, the challenges are as follows. The banking framework for lending, for the right reason, is developed around regulation, around know your customer. It is built around the previous panel talking about seeing balance sheets, seeing profit and loss accounts, seeing track record. Right? Now, India is producing one of the world's biggest revolution around MSME in the form of startup, also in the form of employment creation and GDP. However, the challenge is as follows. Number one, the awareness. Talk of traditional MSMEs, mom and pop shops, small light manufacturing units, or we are sitting here in Bangalore, the new age startups. Their expertise, their claim to fame is not knowing banking, right? They expect the banking to be left to the bankers, right? And therefore, the first issue, the first and foremost issue is awareness around, lending. Now, banking as a service, banking as a platform could be a very exciting avenue because it is at the right point of purchase. We as individuals have taken up buy now, pay later, for example, right? One of the most exciting parts about it is that I'll not get into whether you need to borrow, that much money to buy a consumable or a luxury or discretionary item. But the point is that why it works is that when I'm trying to buy something, I have a suggestion to get the funding. So imagine if I am in Bangalore, I'm in the defense ecosystem or electronics ecosystem, and I'm getting a new order, and I'm thinking about how to actually fulfill that order. And in that process, I'm going to buy some ingots, steel ingots. And on that platform, I'm getting a suggestion about, getting the financing. The other piece is that we are regulated and we are responsible to our stakeholders, right? We as a small finance bank, for example, have millions of customers who are women, who are senior citizens, right? So we have a fiduciary responsibility to protect the interest of the stakeholder. And therefore, collateral or safeguarding the lending and getting the money back is a very important piece. However, what that means is that the MSME has to find the collateral. Third piece is that historically, and even today, we delve a lot on know your customer, but having seen as MSMEs closely, including the traditional ones and the new age startups, they really don't have the time and bandwidth to go around looking for banks and to actually go and make a nice presentation or pitch to a risk officer for a lending to be done. And therefore, convenience is a huge element. The third piece is turnaround time, because they are typically good at what they do. So for example, if I'm a manufacturer, I'm good at manufacturing. If I have a speech shop, I have a secret recipe for the most tasty laddu or burfi, right? But when it comes to planning, when it comes to knowing where the next piece of business is going to come, it's not that I have a managing director as my CFO and I have a full-fledged finance department. And therefore, when an opportunity knocks, I expect that a lender or a bank to be there, to be able to either say yes or no. It's an interesting thing that we have noticed that, it's not necessarily that the answer has to be yes, but the answer has to be certain. So I think turnaround time is a very, very important part. Last but not the least is the cost. And the cost is not merely about having cheaper borrowing. We have analyzed the market and we've seen that due to the democratization, I would say, of lending, there's a huge opportunity to make a paradigm shift from MSMEs borrowing 12-year tenors to fund working capital, right? Again, as per IFC, in India, there is a funding gap of about 33 trillion rupees for just MSMEs, out of which 11 trillion is being serviced by formal sector, 23 is a growth opportunity. MSME, where I include startup, is the biggest opportunity possible. And it is totally aligned with India becoming a Viksit country or a developed country by 2047. However, the problem is that 70% of this 20 trillion gap is actually working capital. It's pure day-to-day working capital gap. And we all know that companies or businesses fail primarily due to lack of liquidity. They fold up due to cash flow issues, not so much other issues. Other issues are minor. However, they've been borrowing for that 30 days, 90 days period for a 12-year tenure. So last but not the least, effective 1st April 2024, in India also now, the new tax regime is basically saying that if you have a money owed to or a bill to be paid to an MSME, you have to pay it within 15 days or maximum 45 days if you agreed with him, or else you'll not be able to use it as an expense, you'll not have deduction, plus you'll have certain amount of penalties. So just rounding it up, and we can do more follow-up discussion, otherwise I might get excited and keep talking forever, I hope not. I think the key takeaways here is that first and foremost, India is standing head and shoulders above. One is the sheer size of opportunity. But the second is for bankers, and I have my colleagues here who are technology experts. I've, at least in my 3.5 decades of banking, never seen such an impact of a digital stack that India has created. It's not just UPI, it's identity. For me, knowing my customer is paramount. In MSME, one of the biggest starting blocks where banks may not find it very feasible cost-wise is that, is Sumit really Sumit in terms of a proprietorship, partnership, whatever? Secondly, how do we figure out the analysis of balance sheet? If I have to give somebody 10 lakhs, and by the way, there are 634 lakhs MSME and growing. A bank cannot do a great job if they do apply a traditional model. The new digital stack in India is helping because, for example, very briefly, we found the ultimate source of truth. And the ultimate source of truth is right under our noses as banks. The bank statement, right? You can make any amount of P&L, balance sheet. You can file GST or not file GST. Of course, everyone does, thankfully. But the ultimate source is the bank statement. And banks are sitting on it. So we'll talk further about, how the whole data piece, AI piece, etc. is helping. But it's a great opportunity. There's never been a better time in India to leverage on that opportunity because it's possible to risk mitigate it. It's possible to generate great returns and contribute to something that is absolutely expedient to, India becoming a developed country by 2047.
Fantastic. It's very encouraging to see, how you view how the SME is going to fuel the Viksit Bharat, Viksit Bharat by 2047 dream. That's going to be reality by only if the MSMEs are going to manage to get the lending, keep in business and grow. I'm going to take the theme a little forward, and with you, Mangesh. Uh, he mentioned about, coming to a decision, yes or no, communicating that decision, yes or no. Uh, as a small finance bank, as a public sector bank, how do you, you know, yes, you have a lot of cutting edge technology that you want to implement, that is out there, that you believe you can implement. How do you balance? I know, the question to you as a CTO is, something very interesting, because I am going to ask you about how do you balance the budgets and the implementation of cutting edge technology with the actual customer interaction, physical customer interactions that you have. How do you balance that?
Thank you, Nikhil, and good evening to all. This is my first session in Bangalore, actually. I recently relocated to Bangalore. So I am from a Ujjain small finance bank, and our bank's vision, basically, it is to provide a financial services to unserved and underserved customers. As a mass market bank, actually, we are among top 2 or 3 in a small finance space. And also we are focusing on giving a sustainable tomorrow for our customers, because these are the customers who doesn't have that much tech savvy, this thing. But then we have implemented many technologies, because there is a steep competition. We have to compete not only with our peers, but we have to compete with other banks also, like private banks, public sector banks. And being a bank, you have to implement all kind of technology, and customer is same, actually, whether it is a customer of private sector bank or foreign bank, or because they want a special service, personalized service, so that they can continue the engagement with you, or they will have they will build a relationship with the bank. So this is the basic minimum thing a customer wants, because all banks are having all kind of technology. If you don't implement the technology, you will not be there in the race. So as part of a bank, we have implemented all kind of technology. We are there in digital channels. We have one of the best core banking system. We have a best CRM system. We have implemented all kind of security solutions, because nowadays security is also one of the concern, and regulatory is coming up. They want to protect customer data, or they have to give secured services to the customers. So we have also invested a lot of, we have done a lot of investment in our security, this thing, and infrastructure. And our digital transaction base is almost 87 to 88%. So, but then that will not end the story. We have almost 750 branches. We have 80 lakhs customers, and all our branches, they are providing all kind of services to the customers. And basically, if customers see that brick and mortar, some branch is there, some physical office is there, they will get some kind of trust or confidence in the your brand. So that is why we have a focus on expanding our branches also. We have almost equal number 750 branches and almost 550, 600 ATMs we are having. So we are providing services. But these are the digital channels. So to interact with customers, we have other this branch is one of the channels, and other things, like we have a video banking. Basically, we have provided the video banking. So like we cannot go in all the part of the country. So we have developed products like digital FD. So that can be used by our existing ETB. You can exist with the bank or new to the banks. So those customers, we have enabled the video banking kind of thing. So once they logs into that applications, that call will go to our official, and he will attend his query. He will give information about the products. So that is one channel we have introduced. Then of course video KYC is there. Every bank, that is a regulatory requirement. So video KYC we have done. Then we have a financial literacy program actually. So our customers, they are basically from the tier 4 or like rural area. So to give a financial literacy, this thing, so we are arranging lot of financial literacy program, and we will give what is happening in industry. They don't have to give this PIN number or OTP number. Those kind of interactions we are doing with the customers. And our actually bank's bread and butter is credit. So our more focus is on micro banking. So we basically provide 70%, our ratio is almost 65 to 70% micro banking. And the business is like that, we have to go to the customer. So that personal touch is always there with the customers. And our repayment schedule also, it is not like a monthly or quarterly or yearly like that. It is based on certain day of the day of the week, day of the month. So that way it is happening. We are our branch people, they are always be in touch with our customers. And then like call center is also there. It is then we have a virtual relationship manager. So for HNI customers, we are not only serving unserved and underserved customers, but we are our HNI customers. Our customers are also using iPhones. So those kind of customers are also there. So for high HNI customers, we have provided virtual relationship managers, and any query or any help is required, they will directly call to the person. That number is dedicated to certain number of HNI customers. So that way we are interacting with the customers, and we don't want, like our father of nation Mahatma Gandhi says, customer is a king. Now customer is not only king, he is having lot of choices also. So we don't want to lose our customer. There should not be customer attrition, or he should continue business with us. So that way we are engaging the customer, we are helping them, and we are targeting that they are using more and more products from our Ujjivan Small Finance Bank.
Very interesting, the video channel that you mentioned. I think that's a very interesting, it's a use case that we've been talking about for quite some time. Very interesting to see that you already implemented that. So great. I'm going to, take the conversation forward. I'm going to take it to Namita. Namita, a simple question, but a difficult question in both. In the sense that, how do you interact with fintechs? How do you successfully interact with fintechs? Actually manage to get innovations on the ground, running, working, because they cannot remain as in small pockets or small silos. So how do you, as a global bank, how do you manage to make sure that innovation is tested and then scaled up across all countries across the globe?
Thank you for asking the simple question, Nikhil. And I know Pankaj was complaining, Ram, that he has given the presentation of whatever he wants to say has been done. Look at us when you have spoken, Venki has spoken, Ganeshan has spoken, and now we have to answer this question of innovation after the innovation panel. But I will just try to bring some different flavor, whatever you have spoken on top of that. I think in this era of design thinking, ideation and prototyping is something which, as a technology partner for any banking and financial institute, is very, very important. Now, businesses are having the bigger problems. Businesses and the global financial institutes like us having huge money and repo at stake. That is the key where fintechs can help. Now, there is a pocket of funding which any business gets, right? Now, either as a business or strategist within the bank, we can get that money and do some use cases by ourselves, build it, or we can collaborate with fintechs and then try to get what is already built and develop on top of that, bring that scale, right? So I think that is an important aspect of any fintech collaboration, where POCs, prototyping can be done with the huge banks who are not able to take their stakes to the customers globally in one go, do the testing, do the due diligence in involvement of fintech institutes. Another dimension which is equally important, along with this collaboration is identification, right? I've seen a lot of collaborations of fintechs and the banking institutes or the financial institutes not seeing the dawn because of, there is not right focus is built on what we want to do. As a business, we have 100 problems to solve, right? Is your problem which you are taking to the fintechs for the realization, for the proof of concepts or point of view, aligned with your strategic priorities, aligned with the vision of your organization, aligned with what innovation you want to achieve, and if achieved, what it drives within your banking business. It's important to have that clarity of thought. Otherwise, what will happen? You will still try to do the POCs with fintechs, but your stakeholders will pull the plug back that because they were not submitted at the time of, or fully heartedly submitted to do that job. So I think to have a really fruitful fintech collaboration, it's very important that as a ask from a bank like us to a fintech is thought through. Identification of the problem statement is very, very clear. It is aligned to the strategic priorities. Do those POCs, do those initial due diligence with the help of fintechs. Then, as the other panelist was saying, right, fintechs will become the big techs, right? So either you will involve them within your business by having the contractuals associations with them, and then bring their proof of concept to a reality which can be scaled globally.
A follow-up question. So, I speak to a lot of fintechs, and one of the biggest complaints that fintechs have, the small fintechs, when they work with large global banks, is the POCs are always expected with no commercials. No one is ready to pay for POCs. How would you react to that?
Well, as part of the strategy team, I say the same thing to my team members when they go and explore with the fintechs. But I think in a bigger way, once the collaboration happens, it's a huge win. Definitely for a traditional financial institute, as you have asked the question, and the banks like us who is globally vast, there are hundreds of fintechs who are trying to associate with a bank like us. Now, as a business, we have to be very, very careful with whom we want to associate. Because once we say yes to one of the fintech, that is a yes globally, right? We are not, a very small institute or not. The reference of saying yes to that particular fintech in some geography will go to the other geography also. So that is the reason probably, this complaint is valid from their side. But I think there is a win-win situation which can be created or worked through.
Essentially, you're still going back to the same point that you made, that focus on the business problem and the other things will get sorted.
And I'm sure that, if the collaboration works, it will be much more fruitful than that fintech is associating with any other local banks. Because here they are also getting the global visibility.
Absolutely. So I'm going to now move the conversation towards the other opportunity that I mentioned about wealth management with Srirang. I just touched upon it. Wealth management as a theme is getting democratized. By that I mean that what used to be earlier only privy, or the services were privy only to a few set of HNIs and the really wealthy customers, is now available to the masses. It's getting democratized. The technology is doing that job. And a lot of the fintechs, or should I call them big techs now, are far ahead of the traditional financial institutions when it comes to wealth management. So how do you do this? How do you see this particular phenomenon going forward? Do you see that wealth management is now going to be a area of competition for financial institutions and fintechs, or you see no, that's still not going to be the case? It's going to be the collaboration still is going to be the number one driver.
Thanks for having me.
Is this an easy one or a tough one?
It's somewhere there, I don't know. It's an opinion. So my view is, wealth has always been a very interesting area for people to play in. And as one of my friends first put it, it's very addictive because you're playing with opium. Opium as in other people's money. So Yeah, it is. So, see, it's combination of free money plus the fact that you're working in a fairly less regulated environment. And you're working with a lot of aspirational growth. Nobody invests wealth saying I'll grow at 3%. Everyone invests wealth thinking I'm going to be, double the money in half the time and so. That's very aspirational. So there is a lot of incentive. It is lower regulated. So the field is open for a lot more people to come. The field is open for a lot more people to innovate. And therefore, I think between a bank and a non-banking institution, I see globally non-banking institutions leading in terms of innovation, leading in terms of customer access. And in India, what you've seen is they've taken mass access play, played it out beautifully, and that's why you see the growth of the Zerodhas and the Grows and so on, where they have moved away from the cost center, where banks have traditionally been able to service, which is high concentration markets, and move the market into tier 2, tier 3 cities, which because of the technology innovation, and they've all of us have benefited. They've just acted it out fairly fast and brought in a lot of transparency into the process. But if you look at it, what they're essentially doing is transaction enablement. The advisory part of it is still restricted to a smaller subset, and that's where I think there is a lot more innovation that needs to happen. I see that area might be things where people will start disrupting in a few years.
Interesting. So it's you still believe that there is collaboration is going to be essential in many ways.
Yes, I think
there
will be collaboration because banks still will hold the money, but where I deploy it would be based on and there is a lot of space in this. In India, I think there is a lot of space. There are a lot of, in terms of how much we invest into equities and markets versus how much we keep in banking. That's shifting, but we've traditionally been very bank-centric in our savings.
Thank you. I'm going to go back to you, Sumit. You said that the biggest data that a bank has is the bank statements. I'm going to ask you to tell me a little more about how do you use the alternate data, as they keep talking about. How do you use alternate data? How do you use things which are not traditional information? So, I know you mentioned the balance sheets and the financial statements. What do you do beyond? Right? Could that be a game changer going forward?
Thanks, Nikhil. I think I'll start by staying a bit boring because I only know banking. And the fact is that the amount of wealth banks sit with in terms of data as a currency or expression of value of owning a customer relationship, we are still, eons away, I believe. The previous panel briefly touched upon organizing the data, etc. And given the, the rapid, progress on things like quantum computing, cloud, all the other technologies that are available, the first and foremost point is that what banks have and things like account aggregation is now has come into India. With consent, we can do a lot of that. And all this is leading to the biggest opportunity segment in our mind being MSME. Because a big multinational or a large organized corporate has the wherewithal to organize themselves and present themselves to a lender in a form that the lender has traditionally wanted, right? It's the MSME where, starting on your alternate data point, first and foremost is supply chain, okay? And in India, with the introduction of GSTN, one of the big elements that has come into play now is that we can independently validate the viability of a business and the numbers that they might be proclaiming from an independent source. So that is one big alternate data point that has emerged, which banks don't own, but now banks have access to. And how do you leverage that? Second is that, again, because of the India digital stack and the usage of technology, we deal a lot in consumer durables, for example. We basically service the last mile supply chain, right? And a lot of Indian brands as well as multinational brands, in partnership with their retail network, are able to now track to the point that a refrigerator got sold in a tier 3 city in India at 4:59 p.m. And when was it built? What was the model? How was it made? We have lots of consumable companies where the field force is going around with a mobile app, where they are capturing a lot of this alternate data, which is about the velocity of the brand, right? And therefore, when we don't have access to, let's say, a 5 crore, 10 crore collateral, and you yet have to make the business, like I said, succeed. My favorite analogy is getting the MSME to a Series A, right? And from there on, they'll be fine. But until that gap is there, we need these alternate data points, which in India now are becoming world class, if not, above world class. I think you want to ask something.
I do. So a lot of times, when the alternate data point comes up, something as simple as what is the electricity consumption of that particular MSME is a very good alternate data point. Are banks actually using that, or is it still something that a good story to tell but not actually happening?
Actually, we are, and in terms of our own experience, I'll share with the folks here, and I think some of others are doing. If not, please do. What we found to be most interesting and feel very responsible and credible about that is that we found that EPFO data is an amazing leading indicator of the health of a business. Because if somebody is not being regular there, if somebody's numbers don't tally with the number of employees, etc., that they've talked about, it tells us a lot. So that's one of the very interesting alternative sources that we've been talking about. Again, sticking to the text thing, MSMEs, a lot of traditional ones are still learning to be, more organized and also all that. And now what we are doing is that we are also incentivizing, lending programs, where, for example, there is a pricing benefit for a customer whose needs can be evaluated and justified purely on the basis of the amount of GST they paid, which is a great incentive, right? So, yeah, good example you use, but I think
I have a couple of, spoken to a few banks in the last 5-6 years. Very interesting stories we get to hear about alternative data sources. We had a larger retail bank which says, I want to establish identity using social media, right? I want to establish proof of employment using social media posts. And we have seen MSME lending, let's say a Kirana store. So you cannot rely on the balance sheet because half of it is fudged or half of it is, you don't see a lot of the transactions because it would be booked under someone else's name and so on. But they started using, the agents would go visit, they trained the agents to see what is the volume of stock available. And that's an indicator of how, a Kirana store in terms of how well they are doing is the amount of stock that they're carrying, right? So there are alternate, and this is not today, this is not yesterday, this is like 8-10 years ago that these use cases were coming up. So I'm assuming that a lot of banks or fintechs are using, secondary data, which
I think, great example. And I think the important thing, and again, a story or example that I've heard is now it's not just about, so the cost of, getting this alternate data, for example, you took example of field agents actually going in and visiting and seeing what kind of inventory you have, that the cost of that is so high that you cannot really, create that data set. But now with AI and with technology, that cost is going down, which ultimately is going to now give you alternate data at a fairly affordable price point, which now you can use for lending decisions or any other decisions that you make. So, put up a camera and all the camera images and you put an AI on top of it, and you can actually see the inventory without actually having a field person going and visiting, but everything getting captured in one go. So kind of, again, how the great, mix of technology and real use case coming together. Would you like to add anything from a global bank perspective? The whole point about alternate data or data analytics and things like that.
So I think from data and data analytics side, it is no more a secret, right? What data, I would like to go back to Ram's presentation in the beginning. He touched upon on agile culture, right? So we are using agile ways of working in HSBC. So I think the very need of AI or any data-based analysis is because we are right now in an agile culture. We cannot have static things and then keep on building our customer proposition or the product proposition on top of it. The world is changing at a dynamic pace, and to keep pace with that dynamism in the business, whether it is banking, retail, or any other business, we have to take help of data and the analytics. So I think that's the key here, that we are talking about a lot of things, but then why AI, why data, why analytics? So it is because the pace of the things have changed. It will change in future even further, who knows? And that is why Gen AI, GPD, all these things will be leveraged, right? So that's the important key, that we are at a pace, and as a business, if we want to catch up on that pace, we have to use the analytics, we have to use ready materials, we have to use the power of data, otherwise we will be at the back seat automatically.
Just wanted to quickly add something on the MSME aspect.
Yeah.
I think, typically the banking model around lending is built around the fact that at the time of underwriting or making a credit decision, right, we are worried about things like what should be the exposure grade, right? So just figuring out the eligibility has been a huge challenge, and that's why the MSME segment remains underserved. And underserved is not a negative way. In fact, increasingly I believe that is the opportunity that is so massive that there is a gap. And then there is predictive elements like, what is the probability that somebody will default and all that. And then what could be the loss when there is a default. In MSME, what we've noticed is why, this agility is required is that through the life cycle, you can't purely work with credit agencies. You can't purely work on formalized data and conventional data, because we've seen that both with startups and now increasingly with traditional MSMEs, their life cycle is evolving far rapidly as compared to a big corporation. So for example, in our organization now, in the head office in Bangalore, the largest team is business intelligence, which is a combination of data analytics and future stuff like AI. And most of the time, with our like 4.5 million odd customers now, a lot of work is ongoing on the basis that we want to leverage analytics to be predictive on two aspects. Very simple. One is, can we predict the loss before it happens and way before it happens? And just by making sure that the customer is doing almost their entire banking with us. MSME did not choose to go to 8 banks. Honest to God, they would avoid. The problem is that they could not get everything from 1 or 2 banks at best, right? So the moment you are able to centralize, within banking, you'll be surprised that for me, alternate data is where, for example, in Ram's case, Ram and company, I don't only have the insight on a term loan I have given against the property, but I have his current account and his savings account, and probably a car loan, and maybe a two-wheeler loan or two for his employees.
So you know everything about the customer and getting that information.
As much as possible, because it's now given that Hindustan Lever versus a Ram & Co., the Ram & Co. opportunity is absolutely significant, substantial. But if we wait for conventional data to appear by itself, it will not happen. And second is that once you've given a rupee in lending, the life cycle of an MSME evolves far more rapidly and far differently from an organized corporate. And therefore, data is the only answer.
Going back, the whole point about, MSME being the driver for India's growth. So perfect. Srirang, I'm going to now just change gears and go to the discussion of AI specifically, right? Now, ChatGPT, I think what ChatGPT has done, it has just made everyone aware of the power of AI, right? From students, my 10-year, my son is in 10th grade and he knows ChatGPT better than me now. He uses ChatGPT more than me now. So I think, the point is that, the awareness has grown about AI has grown so rapidly now that the conversation earlier would have been that, okay, I'm a CIO, I'm going to my board saying I need budget for AI and doing AI implementation. The conversation is turned on its head. The boards come to the CIO and say that here is a budget, do something, implement AI. How would you react to that, and what would you say that how can tech vendors help banks in this journey? This is the tough one. Yes.
This is a tough one, I think, because as a vendor you're biased in very different ways. No, I think all of us have to recognize that the challenges that AI brings. It consumes a lot of information, brings out what looks like very intelligent truth. The challenge is for us to backtrack and say, did it really push us in the right direction or in the wrong direction, is difficult and happens over time, right? And the consequences of these decisions that we rely on AI or we are starting to rely on AI could have a lot of real world implications. So how do you, one of the things we all have to look at is authenticity or, what are the unintended implications of the AI-based decisioning process that we are taking on, right? Or AI-generated decisioning process. Some of it could have fairly large legal implications for organizations, right? So I think that is something I think we should definitely consider, saying how do you validate the intended and unintended consequences of this? Any inherent biases that your large data crunching is resulting in. I think that's one definite part, because you're in a hurry to pick up something and implement it. And the impact of this you will only see in data which comes in 3, 4, 5 years down the line. And 3, 4 years, 5 years down the line, you could have inflicted a lot of damage. So that's one part. The second part is, I think, in terms of outcomes. Can we target? I think we look at problems which are large. I think there are enough problems today out there which are large. Try solve larger problems and leave the smaller ones for the future generations.
Okay, so I'm going to come to you, Mangesh, with the last question. We've been talking about innovation a lot. As a CIO, you have a budget, and you have to make sure that the bank is running efficiently day in and day out. At the same time, you also have to implement a lot of cutting-edge technology and a lot of things. Multiple pressures. So how do you actually separate the budget in terms of run the bank and change the bank?
IT is always seen as a cost center, basically, from business point of view. So whenever we go for the budget, first question whether what is your return on invest and then cost benefit analysis. So in our organization, what we do, we take business also, because our technology should align with the business. So we take all the details from business, what are the projects they are going to implement or they are going to customize in the existing this thing. So we have a deliberation with all business verticals, and then we have our own IT also, its own this infrastructure and security kind of thing. So those are not coming to the business vertical. So those are the regulatory kind of thing projects. So in order to our stability and reliability, we have to allocate significant budget for the run the bank concept. So unless you run the bank, you cannot change the bank. So first of all, our house should be good, so that for running the bank, actually for running the bank, see, mostly it is a majority portion is a OPEX portion. So OPEX portion normally directly hit your P&L this thing. So, and now all these OEMs basically, with due respect to them, so they change their criteria from earlier it was a license model kind of thing, perpetual kind of things. Now they have come to the subscription model. So for a customer like banks or any other customers, for them it is treated as a OPEX kind of thing. So this is the challenges we are getting. So majority portions in running the bank, we are spending for this license renewal. Then we have, like earlier I told you that we have branches. For connectivity of the branches, we have to provide kind of network and security. Then in most of the things, because we do not have that much skill, our team, they will have a skill set in a limited distinct field. So whenever we implement any application or something, so normally it is a tendency to get the managed services from the OEMs. So that factor is also, because managed service is also one of the cost, and it is, in many applications this is a 24/7, and then regulator is saying you should run that if it is a down for more than 2 hours or it is a more than 3% transaction decline, then again that is a separate thing. So for that you have to implement application monitoring kind of thing. It should be end-to-end monitoring. If you miss that, so these are not going to the business, it is a IT kind of thing. So all these required OPEX budget for the running the bank, and we,
I like the way you put it. You know, you need to. I like the way you put it. You know, you need to run the bank first in order to change it later.
Correct. First of all, the bank should be there. Then only we will transform.
Clearly, you know, I think that's the focus that you have.
And then only running the bank will not suffice, because customer demands are increasing, and there are a lot of new products are coming. We have to increase our business. We have to increase our customer base. We have to lend as early as possible. I will give just one example. We had a business strategy workshop Monday and Tuesday and Wednesday. So one of our business vertical, so his stat is 3 minutes for giving the vehicle loan. His approval basically, whether you are eligible for having this kind of loan amount. So he is giving a 3 minutes this thing. So and 45 minutes is a TAT for sanctioning the loan. This much, and to provide this kind of fast decision maker, so fast decision, we should have that kind of technology. So we keep on investing our budget for new transformation. That is called as a change the bank, and we have we have to budget for consultant also, because they are also coming up with some new ideas. So so consultant plus then we are keeping some budget as a contingency budget, so that any envisaged projects that can be handled using that. So
Mangesh has a long list of expectations from the consultants, from the vendors. Let's get together and make sure we are able to solve all his requirements. With that, I think we are running really out of time. Namita, you have one final quick question.
No.
Please.
I just wanted to add on this, run the bank and change the bank, what Mangesh has told, right? Definitely run the bank is something which takes the priority whenever you sit in any funding kind of a discussion. But as I'm just wearing the optimization hat now, because I'm an optimization director here. So see, there is a role which data plays in that, probably creating the business case for run the bank and change the bank also. So I just wanted to, bring that focus here. Let's take an example of real estate, and, because we are bank, the branches or the office spaces. From that corporate services point of view, that is something which has to run. We need the branches, we need the offices, right? We have to invest in that. How data can help is which geography, which place needs how many branches, how many office spaces, what is the footfall in a particular corporate at a point of time, what is the aggregation and the analysis of that data talks about. If you are doing your funding discussions quarterly, then what is quarter-on-quarter trend, which is showing us, and that actually helps you in building the business case for what would be my run the bank next year. What would be my, change the bank this year? Because pocket is 100 rupees, and then if you are optimizing the run the bank, you have bigger pocket for your change the bank.
That's a really great perspective. Thank you so much. With that,
for that also, every bank is having this kind of analytics or data warehousing kind of thing. So there is also investment. So we are doing before investing. There is a
so
cost
consulting is very costly. Mangesh is coming back to the same point.
yeah, as I said, there's a lot of expectation that Mangesh has from consultants and vendors. Let's make sure together we are able to solve his expectations. With that, we are completely out of time. I would like to thank one question from Ram. We will have to accept that one. Ram, I'm going to come over, please. Yes.
Sorry. No, I mean, point well taken, Mangesh. We'll watch out for the budget on the consultants. But apart from that, if I go back to Sumit, I think you made two very important statements. That IFC number translates into something like anywhere between $500 billion to $1 trillion. You convert that rupee number into dollars. And I think the essence of what you were explaining was that it is actually a hitherto a market that has been virgin, because the cost of credit to this MSME has been not, the banks have not been able to sustain that cost, which is why that segment is remaining, should I say, untouched to a large extent. And that's what is being democratized, to borrow your phrase, from a lending standpoint, right? Now, and if I go back to Srirang's comment about let's deal with the problems, the big ones first and the small ones later. But if I just take that logic here, how does one actually deal with the processes which is more than just the data? I think one thing is about having the data and the models and the opportunity to be lent, right? And there was also the other comment of Srirang saying 3 years, 4 years from now, watch it and we'll come in this panel and say, I told you so, look at what has happened, right? How do you actually, what do you build as processes? And this is where the convergence of technology and business really gets into action, right? And how does one actually approach that? Your take.
Well, I think it's hugely work in progress, but again, leveraging of the stack. So what I can share with the audience here is that any non-scorecard based lending is right now an exception for us. Now that means that huge amount of data crunching. But before that, one more step, which is that because of the Aadhaar-based identity, technology available now, we lend a lot in the villages, etc. That's why we have 4.4 million customers. So it is actually split seconds within which we onboard. And then the ability to develop a scorecard and then to execute it via technology platforms means that there is a great customer experience where we are talking of seconds and minutes on the one hand. On the other hand, we have a shop floor model. So where we say that, okay, there is a centralized processing, the discretionary element is being minimized because what was not available until 5 to 6 years back in India is very much available now. However, where we are trying to take it next to is that any scorecard worth its salt needs to have the vintage. And that's where eventually AI will play a huge role. But right now, I would say that it's basic machine learning and all that. To say that, the cost of acquisition, even in this business, which is very retail, and then taking care of the cost of credit and all is going to come when I'm able to fulfill 8 or 10 needs of Ram & Company, not just one. And that's where, again, this processing model, based out of data and based out of predictability, is core to how we are trying to operate. And then the old retail adage that I bank you when you are a college student, and I bank you when you're a tycoon, right? In MSME, it applies more than anywhere else, where you basically are mapping a life cycle, and rather than having a theoretical or hypothesis-based prediction, you are actually giving him all the services such that his behavior is telling you where to be friends, where to be in-laws, sort of. Yeah. So, but it's a huge journey. Every day we are looking at unit cost, and every day we are stretching the jaws in terms of saying that it has to be done faster, it has to be done cheaper, and in the case of a lender, not just losing money because we have a fiduciary responsibility, but also there's a massive regulatory responsibility which has now come on to play because the so-called regulatory arbitrage, if there was any, is kind of disappearing. And now the banks are very happy to be proud to be a regulated entity. And we've always told customers, especially the big corporates and institutions, and also my senior citizens who give their life savings to a bank like Jana, who's itself only 5-6 years old, license-wise. Now, all that is happening because there are these guardrails where a lot of this predictability is happening, and I think it won't be complete if I don't quickly mention that there's huge amount of investment going into the fact that over the years, what has come back to glorify banks for the right reason is again trust and safety. And in this new age, the cybersecurity budget is basically beyond these ROI conversations, right? Because we have digitized it so much now that if I'm saying 90% plus of my business is scorecard based, right? My repayments as a small finance bank, physical cash is an exception. Now, therefore, cybersecurity investment is mostly not a, kind of. So overall, I think, again, great time for banks, especially for a small finance bank, to be serving this middle India, which is to some underserved. To me, it is just a massive opportunity. But the technology space is evolving, and maybe I'm a bit old now because I've been in banking for too long. I'm sometimes surprised about how it is infinite. It's an infinite game, right? A few years back, we did not think that a two-wheeler loan, we could say yes or no in 45 seconds, and then the guy is looking to actually get the dispersal, and it is not on paper. the auto dealer knows that it's a UPI payment, and the guy is walking away with key, sometimes I think pressing a button on the bike and riding it.
Awesome, awesome. With that, I draw the curtain on this panel. Thank you so much for being, very, very, clear with all your insights and inputs, and thank you so much for all the examples that you gave us. Thank you so much.